Salesforce.com reported their Q2 results. Shares are popping in the after hour. We'll take a look into their Q2 results as they topped expectations. Take a look at some comments Mark Benioff, the CEO of Salesforce, had to say in the press release. As always, jump into the income statement, balance sheet, and statement of cash flows. And guys, this might be the best income statement I've seen all earnings season, perhaps outside of NVIDIA's. And as always, jump into the technicals for Salesforce. We'll mark out some key levels that you can possibly accumulate this stock at. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button. We are on the road to 500 subscribers, and it would mean a lot. Salesforce.com up 34% over the past 1 year and up nearly 60% year to date. Those don't include gains made in the after hours. I see shares up nearly 6%. This one's market cap has gone north of 200 billion now. And while the market cap has risen steadily, we see that forward price to earnings not overly expensive at 28 times. We'll see just why that is and how Salesforce expects to grow over the next few years. We see analyst expectations on that EPS side are expected to be in that high teens growth for the foreseeable future. And then on that revenue side, on that low double digits. Jumping over to their Q2 results, we see Salesforce shares rising more than 6% for this Q2 2023. They reported an EPS number of $2.12 per share. Analyst expectations were closer to $1.88, so a handily beat on that EPS number. We see revenues coming in at $8.6 billion. Estimates were closer to $8.53 billion on that revenue side, so a beat on both the top and bottom line. We see they have these remaining performance obligations. Those rose roughly 12%, and we'll get into these later into the press release. However, more importantly, CEO Mark Benioff raised CRM's fiscal 2024 guidance and now expects sales to be roughly between $34.7 and $34.8 billion for the full year. That would represent 11% growth on that full year revenue side. Analyst expectations were closer to $34.65 billion, so roughly $150 million higher on that midpoint. They also boosted their full year operating and adjusted operating margins, coming in at roughly 13.3% and 30% respectively. Along with that, they did increase their operating cash flow growth guidance. That will now likely come in between 22 and 23%. And looking ahead to Q3, Salesforce expects revenues to come in between 8.7 and 8.72 billion. Analysts were closer to 8.66 billion, so a beat on that Q3 revenue guidance as well. Turning over to the comments made by Mark Benioff, CEO of Salesforce, based on our performance and what we see in the back half of the year, Salesforce is raising their fiscal 24 revenue, operating margin, and cash flow growth. So Salesforce is a business that probably has a really good outlook on the next, I'd say, 6 to 12 months in terms of their business. And because they have such large contracts that pan out over such large periods of time, they can fairly easily predict revenues in the upcoming quarters and later on in the year. Benioff also did say that as the #1 AI customer relation management tool and with industry-leading clouds such as MuleSoft, Slack, and Tableau all integrated onto one trusted platform, we are leading our customers into the new AI era. And certainly when you say words like new AI era to activist investors on the call, yeah, their ears will certainly perk up as they were looking to see how Salesforce moved away from these M&As and into focusing more on their cloud and AI technologies. Moving on to the statement of income, and like I said before, this might be the best statement of income I've seen all earnings season outside of NVIDIA's. Coming over to the revenues, we have that $8.6 billion number. That was up roughly $900 million from same time last year, as they were closer to $7.7 billion. Now, when you come down underneath revenues, that's where it gets really interesting for Salesforce. You take a look at your cost of revenue for the subscription and support. Those ticked up just $25 million in this most recent quarter, and professional services actually ticked down. And so you take a look at your overall total cost of revenues. They actually went down $14 million. Off of an additional $900 million in revenue, you were able to control your costs and have them actually go down by 14 million. And yeah, you guessed it, that's going to absolutely explode your gross profits, as they went up roughly in line with revenue, up nearly $900 million. Now, the story doesn't just end there, and in fact, it gets even better for Salesforce. We take a look at this R&D expense, and that actually ticked down roughly $100 million. We see marketing and sales tick down roughly nearly $300 million. You see G&A also tick down. Now, they did have some restructuring expense in this most recent quarter, and they, I believe, had it in Q1 of this year as well, as all those layoffs are a part of this restructuring expense. But you come down to your total operating expenses, and so on an additional $900 million of revenue, you were able to shave off another $400 million of operating expenses. And similarly to gross profit, your operating incomes absolutely exploded, up from $200 million same time last year all the way up to nearly $1.5 billion this year. And so this is phenomenal cost cutting over at Salesforce. And when I read numbers like this, I don't just want to gloss over them, because from a business perspective, this is absolutely phenomenal. On higher revenue, you had lower cost of revenues and substantially lower operating expenses. If you're running, I don't care what business you're running, if you're doing these sort of things, yeah, you'll be very, very successful in the markets. Moving down, we pay some income taxes. We come down to that net income number of $1.3 billion. Last year, it was sitting at just $68 million. And so you see even your EPS just absolutely went through the roof. Along with that, it gets even better for Salesforce, as you see they're doing this share buyback. And so their shares outstanding tick down from roughly 1 billion down to 975 million. Now, what I really like with Salesforce is they break down their statement of income as a percentage of total revenue. So you come down here and you have 100% of your revenues, and roughly 25% of that goes towards your cost of revenues, leaving you with gross margins of 75% in this most recent quarter. You see that those ticked up roughly 3% from same time last year. So you saw your gross margins expanding. Then you come down and your operating expenses went from 69% of total revenues last year now down to 58% of total revenues. And so even your operating margins absolutely skyrocketed, up from 3% last year all the way up to 17%. And coming down to your net income, roughly 15% of those revenues flow all the way down to Salesforce's net income. Last year, you see that was at just 1%. And so certainly the biggest driver here for Salesforce was managing the expenses on that marketing and sales side. You see the percentage of total revenue there tick down substantially, which helped them save a ton on marketing and sales. And clearly, they didn't need it, as they were able to generate higher revenue on a lower marketing and sales expense. Moving on to the balance sheet over at Salesforce, this also looks absolutely phenomenal. You see they have roughly $13 to $14 billion of cash and cash equivalents, total current assets sitting at roughly $21 billion. You come down to total assets, those are at $92 billion. Total current liabilities are just under $21 billion, so a current ratio of over 1, which is good to see. You see their current portion of debt is roughly $1 billion. They do have a bit of non-current or long-term debt, roughly at $8.5 billion, but they have more cash and cash equivalents than debt on the balance sheet, so their net debt is looking good. All things considered, the balance sheet over at Salesforce is quite strong and no issues there. Coming down to the statement of cash flows, we have that $1.3 billion net income number. Last year, you were sitting at just $68 million. We get to add back some line items such as depreciation, amortization, get to add back stock-based compensation, and now look at this. On a much higher net income, on higher revenues, on lower expenses, you gave out less stock-based compensation compared to last year, where you were giving out $850 million of stock-based compensation. And we'll see why this ticked down in just a moment. It relates to their headcount, which is very fascinating to see. All things considered, total net cash provided by operating activities coming in at $800 million. That nearly doubled from last year. Coming down to their financing activities, we see they purchased roughly $2 billion worth of common stock in this most recent quarter. That was in line with what they did in Q1, as their stock repurchase for the last 6 months have roughly come out to be $4 billion. They also paid down roughly $100 million of debt. So you see over the last 6 months, they've paid off a substantial amount of debt also. And so Salesforce returning free cash flow to shareholders in the form of stock repurchasing, paying down debt. Over the past few years, this has been in the form of mergers and acquisitions, as they've done a number of different mergers, including Tableau and Slack. Taking a look at headcount over at Salesforce, now this is very interesting. Same time last year, they were sitting at nearly 79,000 employees. Now at the start of this year, they announced that roughly 20% global layoff, and now they're sitting at just 70.4 thousand employees. And so certainly Salesforce recognized there's too many people down in San Francisco sitting on beanbags, drinking lattes and not doing enough work. Clearly this has proven to be successful for them, as on lower headcount, they were able to produce higher revenues and control costs on every single line. And so certainly when your CEO has a backbone and can recognize efficiencies to be made in the business, your stock will certainly be rewarded. And clearly Salesforce stock has, as you see from the start of this year, it is up nearly 60%. It was on that big decline last year. And when Salesforce announced those layoffs and said it was going to make its business more efficient, investors certainly like the sound of that. Now, Salesforce in the after hours, I see up roughly 6%, trading close to $227 per share. Certainly it has popped, and we'll see if these gains hold throughout the day tomorrow. We can even see it has sort of this longer term uptrend over the past 6 months. Now, certainly tomorrow, we'll see if it hits its head on this upward resistance. Now, as Salesforce moves up, I see the first level of resistance being roughly at that $245 to $244 per share. We see over the past several years, it has acted as some sort of resistance on the way up. Now we'll see if Salesforce can break through that. The first level of support I see for Salesforce is down here, closer to this $205 to $207 range. Certainly, if you have missed the train on Salesforce this year, what I don't want you to do is come in here and chase the stock, as it's certainly been on a monster run. But I think what we can all do from Salesforce is take an investing 101 lesson out of their books. So certainly when your numbers are getting drastically better throughout the year, and when your CEO says they're going to make all these cost cuts and drive efficiencies in their business, and they're able to recognize where to be efficient. You see, last year, if you were taking a look at Salesforce, you would notice that on roughly $7.7 billion worth of revenue, they were just generating $68 million worth of net income. Now, this is a tech company with very high gross margins. So certainly they had the room to drive efficiencies on their operating expense side. Now, a CEO like Mark Benioff recognized this, made cuts, and implemented those in the business. And when you do something like that, your stock will absolutely be rewarded, just like Salesforce. And so when you recognize a stock, particularly a tech company with high gross margins, and they have room to drive efficiencies in their business, as an investor, you should determine if management is competent enough to not just see those cost cuts, but to execute on them. And if they are, then that is certainly a stock that can be bought. In the case of Salesforce, they did just that. And you see the stock has been rewarded, as they have suddenly turned way more profitable than they were a year ago. That was Salesforce for you guys. While a fundamentally very strong company, this is not one I would come in here and chase at these levels, but instead learn from this stock the fact that if you have a company, particularly a tech company, that has the ability to turn far more efficient on that bottom line basis by controlling its operating expenses, the stock will absolutely be rewarded in the markets for doing that. Let me know what you guys think of Salesforce.com. Is this a buy for you at these levels? As always, thanks so much for listening, and I'll catch you guys in the next video.